Hi, this is Tom Nunemaker. Welcome to the Capital Discussions Road Trip Trade Alerts Weekly Update. Dan's still on a ski trip, so he's on his own road trip at the moment. So I'm going to do this update without him. So let's start with our open ES futures options positions. They're all profitable at the moment. The first one is the January 31st expiration. It's up 3.85%. And as you can see, it expires in about 12 days. Today's actually Saturday, so it's 11 from actually now, but this is back trader from Friday. And you can see the expiration standard deviations are 1, 2, 3, 4 before you can get to this upper long. So option view is calling for 100% probability of profit. You can see all the probabilities of touching of all the strikes are at 0%. So this is a good candidate to just let it expire, and I think that's Dan's plan. If you do need the margin, obviously you can just close it because we're pretty close to the max profit. If I zoom in a little bit, you can see we're up 284, and at expiration we'll make probably around 350 something. So you'd give up a little bit by closing it, including the commissions, but again, if you need the margin, go ahead and take it off. The next one we've got is the 17 February position. And let me go grab the risk graph for that. Again, this is similar to the end of January position in that it's very far away from the expiration tent. At expiration, we are about 3 standard deviations from this part of the graph. And you can see that as far as the downside break even, we're probably 1, 2, 3, 4 plus standard deviations away, which is an extremely low probability, obviously. And you can see the probabilities of touching the short strike are at 0%. So this is another candidate. If you want to reverse Harvey, you could. There's not much premium left down here. There is some. So you could do maybe like a reverse Harvey like this. And that lifts up actually, let me just superimpose it. That gives you a couple extra dollars if you do that without too much extra risk. But you don't have to. You can just let this go. I think Dan's plan is he recently did a reverse Harvey, and he's going to try and close it if he gets a good opportunity. So let me just pull up the current chart again. So in 14 days, for instance, if the market sells off a little bit and gets close to this expiration line, I assume Dan's going to close it. And we still have some money to make on it, but that the odds of it actually losing are extremely low at this point. So again, if you need the margin, you can certainly close it. You can reverse Harvey. There's lots of things you could do. You could even add layers if you want. But the bottom line is it's a very safe trade at this point. The next one we've got is the 28th February. Pull this one up. And this one's up 7.88%. So let me see if I can zoom in a little bit. Let's go T15 minus 40 is 25, right? So here's our T plus 25 line. Let me expand a little bit. So this one's in good shape. Dan, he did a reverse Harvey on Wednesday, and it's looking pretty good at the moment. T plus 0 line is looking fine. Really nothing to do. Good theta. Do have some negative delta, so a pullback would be great right into the tent. Probability of touching the short strike is way down at 4%. You can see the standard deviation bands here. It's almost 2 standard deviations away. So again, this is one of the trades that are becoming safer and safer by the day. And one of the measures I use is where is the 2 standard deviation at 15 DTE? Well, it's right here. It's above the short strike. So this is a good candidate to do more reverse Harveys and keep lifting this expiration line. And there's lots of ways you could do that. You could do a little tiny reverse Harvey like that. You could even do a big one. I mean, these are span futures, so if you did something like this, that raises it up to 0, pretty close to 0. So now you have really no risk on the upside. It does obviously increase the risk to the downside. So let's superimpose those. So you do take on more risk, but the risk for span margin doesn't increase much. Maybe less than $1,000 to do that. and that just lifts this up, right to the zero line. And you don't give up too much profit, a little bit on the downside around here, obviously, but short term is not too bad is what you're giving up. So that would be a possibility that I might do. We'll see what Dan does. You could always do some more below the or at the short strike or below. Do something like this. Maybe need to do 3 of them. Let's see what that. Oh, I've got it on both. No wonder. Okay, so that's similar to the first one. Let me try back to 2. Oops, that's positive. Okay, so that gets it close. It's minus 129. So maybe we would want to do 3 if we were going to do this, or I would. Let's see, something like that. That kind of locks in a small profit. It does increase the risk a bit. Let's see, let's superimpose these so you can see it. So it does give you quite a bit more risk. It does push these lines quite a bit down. So instead of doing a 3 lot here, I would probably opt for, maybe this kind of reverse Harvey. Although it's not really reverse Harvey, it's just adding a really wide vertical spread, something like that. Lots of ways to do it, but bottom line is that at expiration, well, here's the 15 DTE. We are inside the or above the short strike, so that's a good clue for me to do more reverse Harveys. All right, so that's the 28th February, and let's look at the next one. So this is the March 17th one. We are up 8.28% on this, and let's see, let's go T41 and see what we have here. So this is 15 DTE. The 2 standard deviations is just getting close to the short strike, so you may want to hold off a little bit on reverse Harvey. You could do another one. It's still fairly safe if you haven't done any reverse Harveys, which doesn't look like it. Maybe you could do something like this, like a starter reverse Harvey, right? Get it up like that. And here's the superimposing to see the difference. And for me, once that 15 DTE is inside the tent, that's a good clue to start some reverse Harvey. So I would be comfortable with this kind of reverse Harvey next week. We'll see what Dan does. And the next one we've got is our March 31st. Oops, I gotta show it to you. Oops, it passed blue, sorry. There we go. 71 minus 15 is what, 56? So this one again is inside the tent, so you could reverse Harvey if you wanted to. I'd probably, because there's so much time, I'd probably do just a 1 lot, something like this. Raise it up a little bit, not necessarily to 0. That keeps the T plus 0 line pretty flat over a really long range. This is 2260, and we're good all the way down almost 100, well, about 100 points if you do this reverse Harvey. So again, when you do reverse Harveys, especially early on in the trade, don't go too crazy with it. Keep them small or wait as long as you can. In this case, the T plus the expiration line above the tent is not that far below 0, so it's pretty easy to raise it up. And we are fairly far above it already. So if it was me, I would probably do, like I said, that 1 lot reverse Harvey. So let me pause it, get the the SPX set up, and I'll be right back. Okay, I'm back with the SPX trades loaded up. So we expired our 20 January trade yesterday, made $903 on it with the, let me take a look, that was 4.49% profit on a max margin use of 20,120. So a nice return for that. So January had another positive month, it looks like. We'll close out this January 31st trade for another profit. So January is going to be a great month. So let's take a look at what we've got for this trade. This one has got quite a bit of negative delta. However, it's been hanging out right around here. The expected return of 978 is up here, which is nice. A little bit of risk, lots of possible reward. And one thing you could do to kind of lock this in is move these upper longs in more. So you could do something like this, kind of raise this in and lock in a couple $100 profit. If you wanted to lock in more, just roll it down more. So now here you're not going to lose very much at all. You still have a nice potential, and the 2 standard deviations is inside of this, so it's a very high probability trade. Expect the return goes down a bit, as you can see, and if we superimpose these, you can see the effect of rolling that upper long in. It starts raising this and lowering that. So here you're kind of locking yourself into a nice gain, but you're giving up quite a bit of potential profit. And the expected return does keep going down. So on the current trade that Dan has opened, the expected return of 978, you are risking that you're going to give up all this profit for a nice potential return if we do have a pullback. So it's kind of a game, a trader's choice thing. It depends on how much risk you want to take versus how much reward you're trying to make. But that is a nice visual way to see what you're giving up for what you're getting. But in any case, this trade looks like it's going to make money. So the next one we've got is the February 17th trade. And let's take a look at that one. Oops, I must have some other trades in there. There we go. And the max margin we're using on this is, forgot to update these before, so the yields might have been off a little bit on the side, but the risk graphs are still the same. And let's go with 3 lines, and T28 is 214. That's 14 days before expiration. That's a good one. So here we are. The short strike, if we look at this, is 0% probability of being touched. And our 14 DTE, 2 standard deviations, is here. So again, this is very, very safe. Excellent reward. There is no risk on this trade except in an extreme move. So 1, 2, 3, 4, 5. We're talking over 5 standard deviation move to the downside before you could lose money on this, which is extremely unlikely. So what do we have? We've locked in a profit of a little over $400. We have a possible return of 2,400. And again, you can do the same thing like we talked about on the last trade. You can roll this upper long in a little bit, and that changes it. Let's superimpose it to see. So you're raising this up and lowering that. So you're giving up some of your potential profit, but you're locking in more profit. So it depends on what your market outlook is. If you think the market's going to keep running up, maybe you want to roll this in a little bit and kind of lock in, kind of ratchet this up, realizing that you're giving up some potential profit when you do that, which happens with all your reverse Harveys. But anyway, this one is in very good shape. It's up $840, which is 3.35%, and it's looking good. Let's see if Dan has any notes for the plans on this. He did a reverse Harvey on Tuesday. Target X is T plus 10 to T plus 19. So this is in the target exit range, this dashed line here. All right, let's look at the next one, February 28th. And I must have some other trades in there still. Oh yeah, I did. Sorry about that. All right, so here's our Feb 28th expiration. Dan says it's performing very well. He did a reverse Harvey. Target axis is T plus 13 to T plus 25. So if we go to, say, T25, that would be his latest target exit date. And you can see the 2 standard deviation, that's T14 DTE. That 2 standard deviation is right at the short strike, so you could do more reverse Harveys here if you wanted to. The trade is up very nicely, almost $1,000 already. So you could start again rolling these upper longs down and locking in some profits. So let's see what that would look like. So you've lifted that up, but again, let me superimpose these two and maybe zoom it out so you can see it a little bit better. So again, as you raise this up, you're lowering that down. As far as the expected return goes, let's use the dashed lines. Here's the one that Dan's got currently opened. Expected return of almost 2,200. If you lift this up, it drops it a little bit, but not too much. So again, depends on your market outlook. If you think the market's going to keep going and you're conservative, you may want to raise this up, but you don't have to. The trade's looking really good. T plus 0 is fairly flat, just slightly negative delta. Good theta, and it's in good shape, as Dan says. All right, and let's see, it's 17th of March. It's my son Spencer's birthday, St. Patrick's Day, right? So that's the margin on that one is this, a little bit less. And T56 minus 15 is T41. And let's see where our two standard deviation is. Okay, so we are inside the tent, not quite to the short strike. Dan's notes on this, he did a reverse Harvey on Wednesday. Um, and he can easily reverse Harvey again. So, you know, based on the standard deviations that I kind of use as a guideline, I'm definitely okay with another reverse Harvey. The T+0 lines are fine. We're starting to get the theta is still positive, so if we throw some more lines on here, let's see what they look like. The family of curves is compressing, so we are losing a little bit of theta. So if it were me and the market keeps rallying, I would be fairly quick to do a reverse Harvey and start lifting this up. But we'll see what Dan does. If he has this debit spread, if we look at the original prices, again, we're looking good for this one, as Dan said. Nothing to do right now. Again, if you do have a market opinion that the market's going up, you may want to reverse Harvey, lift this up, or you could take off the debit spread. That's a possibility. But in any case, the trade is looking good, and we only have one more to look at. This is the March 31st position. March 31st was launched Thursday for 85 cents. We got the in-out combo spread filled. No immediate plans, and if he rallies above the break even of the debit spread, he'll close it and add another one, and I'll show you the original prices too, so you can calculate those yourself. Here's the debit spread, and here's the credit spread. But the trade's looking fine, nothing to do at the moment, still lots of time to go. If we go T55, let's see where the standard deviations are. They're still pretty far away. They are inside the expiration tent. So if you wanted to, you could start reverse harveying, but there's no need to at this point because things are pretty flat. Lots of time to go. So that's it. I hope you have a great week trading. Hope Dan has fun skiing, and we will see Dan next week. So we'll see you later, everyone. Bye.